So let's do a quick market update. You know that the guy who wrote Rich Dad Poor Dad has said in October we're going to get the biggest market crash, or mother of all crashes, or some such over exuberant comment that he made. So where does that leave us? I want you to see the S&P 500, which I'm going to pull up on screen now. And what you can see there is, of course, and that's going back to, well, 1962, which isn't much use to us, obviously. But if we were to zoom into that and look at the more recent period, you can indeed see that, yes, we're at unprecedented levels. There's a useful term, isn't it? And we are indeed constantly at these ridiculous highs. So where does that leave us in terms of what may well happen? And we're getting a bit of a move down. If we did get that back down, I mean, given that we're starting in from momentum terms at far higher levels than we've been at even then or there, and when that happened we had about 3 years of downward moves. So if we did get something comparable, and let's say this was the month in which it started, yes, you would be looking at about 2 years of slides in that direction. It's not to say all stocks will slide. They didn't all slide back then either, but it certainly means that there is some downside move. Now, the causes of any shift to the downside this time will be different, very different to what they were back then. One was the tech boom and bust, and the other one was the financial credit crunch, neither of which most people saw. I guess with the tech crunch, we saw that it was going to pull back to more realistic valuations. Are we there for this? It's too early to tell. Most of these things you only spot afterwards in hindsight and say, well, of course it was bloody obvious, look. But you can see here that, well, let's just put it in terms of what am I doing. I'm not going into cash. I continue holding stocks which I think will be resilient to undoubted falls which are going to come. I don't think the falls will be as significant yet. I reserve judgment a week from now to change my mind. Will be as significant yet as an almighty crash. But I do think we'll get greater volatility to the downside. There is more things to worry about on the downside, not least because the markets keep bloody talking about it, and you can talk down the market just as you can talk it up. So for that reason, I continue having companies, and I stick to companies which are rich in cash flow, because that's going to matter when the markets fall, but ones which are generating growing sales and are profitable. All those things will matter if the markets fall, and of course they continue to matter if the markets rise. So what about stocks which don't fit those criteria and are still rising? Well, those are the ones where it's just speculation and they do well for a short period of time. Not mine.